Hey everyone, how's it going? I just wanted to kind of go through a few tax topics with everyone. The video is targeted mostly to newcomers and people who just want to learn a bit more about taxes. Not going to go through anything really fancy or crazy, it's just very, very basic concepts that are good to know in Canada. So, what I'm going to go through today is only personal taxes. As you know, right now we are in the middle of filing our personal taxes, and everyone's just rushing around. So I thought I'll just make a quick video about, some important concepts to note about. So the first thing, we'll go to about 11 concepts, and I'll go through them line by line, just giving you very, very high level overview and walking through some examples. So the first and second concept kind of go hand in hand. So the way it works in Canada is it's a Robinhood concept. The government takes money from the rich and gives to the poor. So basically, higher the income, higher the tax, and lower or no benefits. So the more higher or more money you make, the less benefits you get, and the higher is your tax slab. I'll show it to you with examples, and it'll be more clear. But just keep this at the back of your mind. When we go through the examples, you'll understand it better. The next is, in Canada, you pay two types of taxes. One is your provincial taxes, and that is based on where you reside as of 31st December. So I reside in Ontario. I pay provincial taxes to the Ontario government. And the second is federal taxes. So that is your central government. You have to pay taxes all across Canada to the federal government. That is not based on your residency. So you can live in any province, but you still have to pay federal tax. Whereas provincial taxes, it changes from province to province. And if you want to know like your provincial tax, I've also kind of put in the links in the video. So you can kind of go through, which province you are and how much taxes are kind of applicable to you. So I'll show you this. Say we are looking at tax year 2023. Let's say I'm looking at federal and I hit apply. So as you see for the first, so let's call these slabs, slab 1, slab 2, slab 3, slab 4, slab 5. The higher you go, the higher is your tax. All right. So say if you're making about 53,000, you only pay 15% of federal tax. But now let's change the province to Ontario. Hit apply. You see the first 50,000 is only taxed at 5%. As I said, you pay both federal and provincial tax. So in this case, your provincial tax is 5.05 plus. Let's go to the federal. How much was it? About 15%. Yep. So plus 15%. That gives you about 20.5% of your total tax rate. Now, this rate is also referred to as marginal tax rate. We'll also go through it in the example. This will be really clear to you. So this rate is very important because you need to understand the income that you're making and the tax implication of it. Now, let's also look at other example. Let's say someone is in Ontario as of right now, and then they go to, in year two, they go to say Prince Edward Island. So you see from 5%, now their tax has gone up straight, which is almost double. It's gone to 9.4%, 9.8%. So again, depending on your province, the tax brackets also change. So yeah, you need to kind of be mindful of, calculations like these. Uh, okay. The next thing is basic personal credits. This is also a very important concept. It's the Form TD1 that you fill out at the time of employment. I'll go through this. I'll make a separate video for this because um, you need to just understand as of right now the very, very high level concept for this. And what does your basic personal credit mean? It means that federally, up to $15,000, you don't have to pay tax. Each province has their own specific basic exemption limit. That is when you fill the TD1 form, that's the HR kind of gives you that form. It means that up to the first $15,000, you really don't have to pay tax. And for provincial also, there is an amount. Whatever, I think for Ontario, it's about 12 or 13,000. Don't really remember the exact amount. But say up to the first $12,000, there's no Ontario provincial tax. So I think the first five concepts, now we can kind of take all of these into, okay, let's also look at like six. So then that way I can take all six into one example and we can do a simulation. So six is your refund slash owing, and then is the benefits. So your refund or owing is at the time of year end. Basically, you kind of settle your accounts with the CRA. CRA is Canada Revenue Agency. Whatever you have payable or receivable, that you'll get it at one time. That is at the end of the year. And your benefits, you kind of get them quarterly. Now, all of this will start to make sense when we do an example. So let's quickly dive into a live example. This is like a working software. So whatever I do is like real time, and it gives you as of 2023, it'll give you as of 2024. We are in 2024, but we are kind of doing taxes for 2023. So okay, I'll also kind of cover another important concept, which is your period of filing and the due date of filing. The period of filing is your filing as of 2024. You're filing for 1st January to 31st December 2023. So you're filing for the previous year in the current year. And when you have to file is by 30th April for individuals. So just one more month of tax season, and then yeah, I'm kind of free. But the next month is going to be crazy. So up to 30th April, there is, the individuals have time to file their taxes. And for self-employed people, so let's say if you have a small business or you're doing Uber, Lyft, etc., they're also called like self-employed, where they work on their own terms. For them, the filing date is up to 15 June. So the government has given them like an extra 45 days. But if they have a tax payable, they have to pay it by the 30th of April. So technically, the 30th of April is just like, is kind of a due date, because even though you have to file late, if you have an amount payable to the government, you have to pay them by the 30th. So yeah, so just for practicality's sake, like, yeah, it's basically 30th of April where people kind of rush in to finish their taxes. EICPP, I'll go through a bit, but first let's do a working calculation, with numbers. That way you can understand the first 6 points like really, really clearly. So, okay, let's take an example. This is an example of just I'm taking a random example of best employee is basically the employer name, a best employer. Let's make it best employer. And let's say, look at the numbers on the left. This is your refund, your balance owing. I'll also go through the summary page where you kind of see the final impact of everything. So I've assumed that this person is staying in Ontario and the person is making $5,000. Okay. Just a second. Okay, $5,000, or let's say $10,000 just for fun, so that you can see the actual impact of the numbers changing. Okay, the moment I hit 10,000, look at the total amount over here. It says zero tax, zero. The reason is because of the basic personal credits. So as we just understood that up to the first $15,000, there's really no tax. You don't have any federal, you don't have any provincial tax. Okay, now let's just change this amount from 10,000 to 25,000. This is a full year income that I'm talking. Say the person made $25,000 in a full year. Let's see what happens. Okay, it's taking some time calculating, blah, blah, blah. Okay, awesome. So we have a $1,500, 15
940 of balance owing. And where is this coming from? Now let's see. So it's about 1294 from the federal and about $300 from the provincial. So we can go and check exactly in the sum document, like where is it coming from. So as you see, your total income is 25,000. We assume as of right now there are no taxes deducted or anything. Like it's just 25,000 of pure income that the person is making. The person owes about 1294, which is reflected over here. 1294, 300 in provincial, 300 in provincial, and a total of 1594 is payable by the person. Now, as I showed you earlier, the marginal tax rate, because this person is in the first slab over here, we looked at Ontario, 5% of provincial tax, over here 5%. And if I go to federal, sorry if there's noise in the background, it's just there's some work going on. I can't really do much, but yeah, uh, 15%. So you see here it's 5 plus 15, that's 20.05. So here it's 20.05. What does this mean? It means that on every dollar, you have to pay about 20.05% of tax. So that is your marginal tax rate. So every $1 that you make, you're going to pay about 20.05% of tax. Now, what is your average tax rate? Your average tax rate is the total amount of tax that you have to pay on the full amount of income. So if I look at the 1594, 1594 divided by 25,000 times 100, that gives you 6.38%. Now you'll ask me, why is this so low? So as we kind of studied earlier, it was 25,000 minus the 15,000. So you only taxed on the balance of the amount. So because of the first 15,000 is exempt, you're kind of having a lesser tax amount that's owing. So in this case, your marginal tax rate is 20.05%. That means every extra dollar you make about like, you make, you're paying 20% in tax. But as of, if you look at it overall, because of the first 15,000 exemption, you're getting only a 6% of tax rate. Now, if we kind of scroll down, whatever says estimate, so you see GST, HST estimate, see climate action incentive estimate, you see OT, EPC estimate, and you see sales tax estimate, those are your benefits. So if I kind of add all of the benefits together, so it's 519 plus 560 plus 446 plus 360, that's about 1885. And as I said, the in this line where I said you have an amount owing slash refund. So in this case, we've assumed that there is no tax deducted. You have a total 1,594 payable. So this is one time you'll have to pay this at the end of the year. Like whenever you file your taxes, you have to pay the 1,594 in this example. And the rest of the amount that we saw, the 1885, you'll get this each quarter. So July, October, January, and April. So if I do 1885 divided by 4, it's about $471 that you are going to get as benefits. So these amounts that says estimate, 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 they are all estimates, and the CRA will send you a notice for all of this confirming your final amount. So this is just indicative as of right now, but you should wait for the CRA to send you a notice, and that's when you'll know your exact amount. So for now, in this case, this scenario, you have about $1,594 of tax owing, and you have about $1,800 of benefits. Now let's kind of look at it in a real world scenario. In a real world scenario, this won't be the case. You'll also have like income tax deducted, because if you check your payroll, your employer is supposed to deduct some amount of tax. So say, for example, the employer deducted about $2,300, just for example. Okay, let's see what happens. Look at the figures on the left. Wow, now suddenly you have a refund. So what does that mean? Now, if I go to the sum, it basically says you owed about $1,500, 1,594 to the government, but your employer has already deducted $2,300. So the net amount of refund, like, you've actually deducted more tax, so you'll kind of get it back. So you'll get, in this case, you're going to get like about $700 back as, a refund. Also, as I said, province to province, the tax rate changes. So now let's kind of go back and change the province. So I've gone and changed the province from Ontario to, let's say, PEI. Okay, hit finish, dismiss. It's taking some time to load. Yeah, so I changed the province, and you see directly there's a big impact in the refund. It's from 700, it's gone to 118. And if you see the amount of provincial tax in this case, like, let's go to the summary and see, like, the total tax payable is 2181, but from the province it's 886, just because we changed it from Ontario to PEI. Look at the amount of difference. So your marginal tax rate and your average tax rate both kind of goes up. I'll again go and change it back to Ontario, and let's see what happens. So the old amount was 118. Now I change it back to Ontario. Let's see what happens. It went to 705. So you see, just by changing the province, here Ontario was asking for only about $300, whereas Prince Edward Island was asking for about uh, for about 600-ish dollars. That's why your refund was only, about $100. So yeah, just by simple things like this, when you kind of move provinces, there are changes in your refund or payable structure. Also, now to add another iteration to, points number 1 or 2, the Robinhood concept, and higher the income, higher the tax. Let's kind of keep an eye on the benefit section also over here. Okay. Now, if I kind of go back and change the person from 25 to 55,000. Okay. Look at the person's, let me say this person did not have any tax deducted in a very hypothetical scenario, just to understand the tax impact. So on 55,000, this person owes about $8,000 in taxes. And let's look at his average and marginal tax rate. So yeah, marginal tax is 29%, which makes sense, about 30%. Um, which means that on every dollar that the person is earning, he pays about 30% of tax, whereas average tax is the total tax that's payable, 8,000 divided by the 55,000. That gives them about 16%. And also look at the benefits. The benefits have also kind of zeroed out now. So the higher you go, the person initially was getting benefits. Now all the estimate have all become zero. The only thing that the person will get with is climate action initiative. And let's go to the T4 and say now this person is doing really well. He or she kind of has 125,000 income. So look at this, it's about $33,000 of tax payable. If I look at marginal and average tax rate, it's ridiculously high. So it's about 43% of tax. So every $1 he or she is earning, they're paying about 43% of tax. And total average tax rate is about 26%. So it's 33.069 divided by 125,000. That gives you times 100, that gives you about 26.45. So because of the first 15,000, you've kind of saved a little bit of money, but still you look at the overall tax rate, it's about 1/3 of your income is just going in taxes. Now let's go and change this even more further to see, like, okay, now let's say the person becomes a VP or a director or something like that. They earn easily around 325, 300, 350,000 salary. So if I look at this from 325, the total tax payable is about 132,000, which is ridiculously high. The marginal tax rate is 53%. That means on every dollar, the person is actually losing more than 53% to the government. So what he's getting in hand is really peanuts. And the average tax rate is like 40.9%. So yeah, if you look, like, it's almost 1/3 of your salary that you're giving to the government. Now, let's say this person even moves more further into like a CEO role or something like that, wherein their salaries go up to $1 million easy. Oof, this is not fun because out of 725, person has lost more than 47%. Like, you look at 725, the tax that the person has to pay is almost half of their salary is just gone in taxes. It's just disappeared. So yeah, that brings, I think it kind of ties into the first six plus 8 and 9 point number 8 and 9 also, where the higher you go, the more the tax. Your basic personal is, just remember for simplicity, about 15,000. You have to pay provincial as well as federal taxes. Each are like, federal is the same, but provincial depends upon the province. Marginal and average tax rate, you're good. Benefits is quarterly, whereas refund is a one time. Now we go to EI and CPP. Cool. We were at EI and CPP. So again, very, very simple and high level concepts. EI is basically employment insurance. I'll put the link in the video description at the bottom, where you can kind of go through what EI and CPP is. But just to add in a nutshell, EI is you pay money into a pool, which is deducted from your paycheck. And if you lose your job, the government kind of gives you money. So it's like an insurance. And I hope it doesn't happen to anyone. But yeah, if you lose your job, then the government kind of pays you money to kind of get it back. So it helps as a safety net. And CPP is again Canada Pension Plan. This you get at retirement. So yeah, you get, like, it's not a lot, but say $2,000-3,000 a month or a year. I don't really remember the exact amount, but the concept is like you pay in now and you get this money at retirement as pension. Point number 8 and 9, we've already gone through. For what period are you filing and what's the due date? Okay, what happens if I don't file? So if there is a refund, then you're good. So, nothing really happens. But if there's a tax payable, you have to pay it with interest. And if you don't file before the 30th of April and you have a tax payable, you're charged about 9% of interest per year. So, yeah, make sure that I would recommend strongly that you file your taxes. And lastly, what's the process of filing if you're doing it for the first time? So you find an accountant, you submit your documents, you file your taxes, you receive a notice of assessment from the CRA. This comes in like a physical notice of assessment. It comes through mail, like physical mail. You set up your CRA account. You respond to a notice, like you get a benefits notice. You need to respond to it. I've actually made a video. I'll put the video link in the description. And lastly, if you have benefits that you're eligible to receive, you receive them. So I hope you all learned something today. And yeah, thanks a lot. I hope my video was helpful. And yeah, reach out to me if you have any questions, if you want to file your taxes. Always happy to help. I'm leaving my email ID in the video description. Yeah, chat soon. Bye.